Very good evening, everybody. Welcome to the webinar Bitcoin 101, How Does It Work? I'm Ming Hui from Phillip Futures, and speaking to us today will be Mr. Andrew Han, Head of Institutional Solutions at fintech startup Traddictiv. Andrew has over a decade of experience trading futures, options, and FX, and in tonight's webinar, he will help us understand the technology and infrastructure behind Bitcoin, as well as the technical analytics that can be applied to it. Before I pass this on to him, I'd just like to inform you that if you have any questions throughout the course of the webinar, please feel free to drop them into the questions box as we will have a live Q&A session towards the end. And now, without further ado, let's have Andrew speak to us.
Thank you, Minghui. Can you see me all there?
Yes, all good.
Okay, great. So I'd just like to thank Phillip Futures and for hosting this event, and also ICE for also participating in this event as well. And yeah, here we are in 2021, looking at Bitcoin 101. How does it work? And if you know anything about the history of Bitcoin, you may know just a little bit of trivia that Satoshi Nakamoto is 46 this year. He turned 46 on the 5th of April, I believe. And but the question is, who really is this guy, Satoshi Nakamoto, who wrote this paper? Now, this white paper about Bitcoin, and if they actually have interest in reading it, is found on bitcoin.org, right? And if you know what the length of this white paper is, you'd be surprised to hear that it is actually only 9 pages long. So it won't take you very long to read this white paper at all, and yet it has generated over the last 10 years. It was Bitcoin started in 2009, and so it was 10 years old in 2019, and less than 3 years after that, it's trading at over 1 trillion in terms of market cap, Bitcoin alone, and the whole industry, the market cap is at I believe almost 2 trillion. So Bitcoin traded at new all-time highs on just this week, reaching over 63,000, right? So an incredible number, an incredible move from where it was even 3 years ago. So here we are today, and what I plan to do is go through some of those market mechanics, and then talk about some of the fundamentals, and also spend a little bit more time on the technical side of things. Okay, and as Minghui said, I mean, if you have any questions, then feel free to put them in the chat box, or in the question box as we go along, and then we'll have the Q&A at the end of this session. So let me move us forward here with the agenda. Just by way of introductions, I think Minghui has already introduced me, but I'll introduce the company Traddictiv and our trade with UFOs. I'll talk a little bit about that very briefly, but we will talk in more depth about what is Bitcoin, how does it work, how can we analyze and trade Bitcoin, and there's a couple of little bonuses for you at the end of this presentation, and some educational resources, as well as the Q&A time. Okay, so I won't talk about me anymore. I think you've heard enough from me about me, but if you are interested in some of our technologies, and we have this website called tradewithufos.com, where we have our some trading algorithms, which I will go through later on, and And so if you are interested in the technologies that we have, you can go to this website. Okay. But without further ado, well, actually, just before we get into this, I'd like to find out maybe just a little bit about the audience. You know, there's a number of you out there who, well, I've, you know, would have never met, and so I just want to get a sense of who is out there in the audience. And so, you know, if you're new to trading, you know, it'd be great to kind of get a sense of, you know, how many of you are out there are new to trading, and so if you can just type in there in the question box, you know, what your trading experience is, that would be great, just to get a sense of, you know, what your trading experiences are. Let's see if we've got some notes. People responding, they're novices. Done some options, equities. Okay. Anybody trading futures or forex? Okay. Great. So thanks for those who are responding. Okay. So it sounds like, you know, from those who have just given an initial response, there's a mix of folks who have, some have no experience, others more have been involved in equities, some have some experience in options, and others are actually involved in some alternative coins, so also doing some cryptos. Okay, great. Okay, so yes, let's get into Bitcoin. All right. Okay, pretty anxious about that. That is great. Yeah, so Bitcoin. What is Bitcoin? So the definition of Bitcoin is part of, it's really a digital form of a medium of exchange, okay? But the difference here is that there is no central bank control, right? So normally you have the MAS, in the case of Singapore, issuing legal tender, right? So what we are legally able to exchange, you know, whether it's paper or the coins that are minted, right? We're able to go to a store and, you know, and basically purchase the products, right, in exchange for the fiat currency, right, the Singapore dollar, right? And so instead of the MAS in the case of the Singapore dollar being issued, right, the financial system as it relates to Bitcoin is managed by thousands of computers, right? And they are all around the world. So I know I have a friend here in Singapore who has a mining rig, and he is part of that, you know, Bitcoin financial system, right? There are also thousands of these computers in China, in the US, in Venezuela. You know, some of these computers are, you know, located in, you know, probably in the desert where, you know, there is you know, maybe electricity and the internet, but where it's cool, where it's dry, right? And so these computers can be located anywhere in the world, right? And they contain software which is essentially a ledger, right? Keeps the ledger, and this open source software, you know, basically is accessible to anybody in the world, and it connects these computers, right, to this whole ecosystem. Okay, and so I'll have a diagram of this to kind of give you a bit of a visual of it. But this decentralized ledger, right, is essentially using what they call the blockchain, right? So what this blockchain is, right? It's data, right, that can only be added to this ledger, right? So once it's added, it cannot be modified or deleted, right? Or at least it's extremely difficult to modify or delete it. And if you do anything to that piece of information, right, it means that it's going to have an impact, right, on the prior data that has been basically been encoded, right, into the ledger. Okay, and so how we ensure, right, that you can't modify this data is through what they call a pointer, right? So it's kind of like a key, right? And this is why they call it's, you know, in the world of Bitcoin, we call it cryptocurrencies, right? Because what it involves is cryptology, right? It's a encryption technology, right? It's a hash, right? It's a number which is encrypted and which cannot be broken, right? Or that needs to be deciphered, needs to be unencrypted in order to determine whether that piece of information is valid or not, right? And so that's where we go into talking about this pointer, which is actually this hash, right? It's a unique fingerprint, and this, as with our own fingerprints, it's unique, right? And so that's why if you even modify that, or even attempt to modify that fingerprint in any sort of way, it invalidates, right, the block, right, that is being formed through this hashing process, right? And so what this encryption, what this hashing does, is it allows trust, right, or faith to be formed in this block, right? And so you form this secure structure, right? A chain of blocks, right? That if one block is not validated, then essentially that chain will not continue on from that block, right? And so that is why you really have, right, this role, right, this mining process, which is essentially a process that validates the blocks before they're added to this decentralized ledger, right? And so this whole concept of mining is actually a process of validation, right? Because when you're in this peer-to-peer decentralized network, which the whole idea is to engender trust into the system, right? You need to have a process through which you are validating the block that is being formed and that wants to be attached to the network, right? So without that central authority, you have this role of miners, right? Who basically their purpose is just to validate the transactions that are occurring before they actually get onto the block. Okay. So essentially, what is happening then? Okay, these miners, right? They have essentially they're essentially executing what they call a consensus algorithm, right? And so what that means, right, is that you have a number of miners, right, who together, right, coordinate amongst themselves and agree to whether a block is valid or not, right? So before that block is even attached to the ledger, right, you have at least 6 miners, right, who have to validate the block before it gets attached to the blockchain, the Bitcoin blockchain, right? And so they all have to agree, right, on this single source of truth, right? And so what they're doing there, right, is actually proving, right, creating a proof of work, right, to validate this the transactions that want to be put onto the ledger itself, right? And so because you have a number of miners, right, validating that same transaction, right, it ensures the security and the integrity of the block and therefore the blockchain. Okay, so visually, right, and I'll come back to the wallets. Okay, so visually what it looks like is really you've got what they call a GPU, right, which is basically a processor, a processing unit, right, and that together with power on a circuit board, with memory, right, and installed onto that computer essentially, right, is the algo, right, the algorithm, that open source software, right, which forms the consensus algorithm, right. And so what it is basically doing, right, this forms the miner, right, or the mining rig, right, and each of these is basically a node around the world, right. And so these days, commonly, you have to have multiple rigs, right, attached to each other, and commonly that's called a mining pool, right. And I'm talking, not just well, you can have 6 or 7 of these rigs, but there are places in China, right, for example, where there's whole buildings full of these computers, all linked together, right. So when you talk about a pool, we're talking like thousands of the hundreds of these mining rigs pulled together, right. And so together, right, around the world, essentially they're all validating transactions, right, and that forms basically the Bitcoin spot market rate of the price of Bitcoin. Okay, so that's how physically Bitcoin is validated around the world, is through these miners who are interconnected through a decentralized network, right, through essentially the internet, right, and it's all of these transactions that are going around 24/7 that forms this the market rate for Bitcoin, okay, through the various exchanges around the world. Okay. So back to this idea of wallet, okay, before I keep on going here. And so the question comes, all right, we've got a network around the world that is validating transactions, okay. So where do these transactions, how do they occur, right? Well, so if we think about money, I mean, we have a wallet, right? And so there are cryptocurrency wallets out there, which is essentially a technology-based tool, right, that connects or interacts with the blockchain network, right, commonly through an exchange, okay? And so there are 3 types of wallets, right? really there's a software-based wallet, there's a hardware-based wallet, and paper wallet. So actually, if you go to a Bitcoin ATM, and actually I saw one in Singapore, I do see them in Singapore, but what these Bitcoin paper wallets are essentially is a printout, right, of your key, right? Now I won't talk about the different types of keys here, but essentially the key, right, what they call a private key, is a string of characters, and without that key, right, you will not be able to transact with your Bitcoin, right? So who's heard of the case recently in the news, right, where with Bitcoin hitting over 50,000 now, over 60,000, and now up to 63,000, right? We've got guys who have thrown away their computers, which actually housed the information, right? This key, this private key of of hundreds, if not thousands, of Bitcoin worth, I think in one case, over $300 million. And there was one guy who had $300 million. Can you imagine that, of crypto Bitcoin, which is in a dump somewhere, buried in a dump. And then we've got another case where the guy he can't remember the password, to his wallet, and so again, it's millions of dollars that he's not able to access. I think he's already attempted 8 times, and he's got 2 tries left, right? And so this is the world of cryptocurrencies, where without a central authority, right, to validate, right, the currency, right, or to issue the currency, to say that hey, this currency is Singapore dollars, and here it is printed on plastic these days, or minted through coins, right, without a central authority to issue it. You've got to keep your cryptocurrency safe yourself. You're responsible for that, because if anybody gets that key, right, they can take your cryptos. They can take them. So this is the world of not just Bitcoin, but it's all the other digital currencies that are out there, also have the same requirement, this need for a wallet. Okay, so you're responsible for keeping them safe. You lose it, and that's it. That's just the way it is. So again, you've got what they call hot wallets and cold wallets. The difference there, I've got in a diagram. Okay, let me just jump through here. I'll come back to this, right? But in terms of order entry trade execution, you have all of the miners, okay, in these mining pools, all connected to the spot market. Okay, that forms the price of Bitcoin. And commonly you'll have a platform or an exchange through which you transact, through which you place your orders, right, to either buy or sell Bitcoin. And so this is where you would either have a hot wallet with that exchange, right, which is always connected to the platform through the exchange, or you would have what they call a cold wallet, right, which is not connected to the platform, but which is a piece of hardware, right, and it looks like a USB drive, right, if you want to visualize that. And so this USB drive, this cold wallet, when you want to transact in Bitcoin, you will need to connect it, okay, to your platform, and then that's where you would either buy or if you want to sell your crypto, that's how you would transact, right? By connecting it to the platform, which then would send your order, okay, out into the spot market, right, for Bitcoin. So your order to sell Bitcoin would go to the market. The miners, okay, would validate that transaction, right? And that transaction usually takes at the moment about 9 minutes to validate, okay? So if you want to, sell your Bitcoin or purchase your Bitcoin, you could wait up to 9 minutes for that transaction to complete. Okay. Okay. So let me pause here. I think there's some probably looks like a number of questions. Let me just see what I can answer at this point in time. So there's a question about protecting your mnemonic phrase. So what this is referring to is so I think when you're talking about hardware wallets, so the cold wallets, and so again, the vendors, the sellers of these wallets, right? These hardware wallets. I mean, they will have their own, security around it as well, right? Because again, I mean, these they want to make sure that they keep your key safe, right? And so, yeah, in that case, they may give you unlimited tries, right? But if you can't remember it, then that's it, Or if somebody gets hold of that wallet and then starts to, run a program against it to try and guess a phrase, right? Then that can, that could actually occur, right? Very hard to break, but if it's physically out of your hands and somebody else has it, well, they could take their time and try and break your mnemonic code. So it brings a lot of different complexities to securing your wallet, right? Especially if you have a large number of Bitcoin, and so there are multiple redundancies that you can employ as a result, and especially I think when you're talking about the emergence of financial institutions who are involved in Bitcoin nowadays, they have to have multiple redundancies to protect these private keys. So it's a great question because this new world of digital assets, of cryptocurrencies, brings in multiple questions that need to be answered, that we can't take for granted. Okay. All right. So let me just see if there are any other sort of questions that I can answer at this point. Yeah, great questions. Okay, so maybe I can talk just a little bit about, before we get into the analytics around Bitcoin, maybe just some of the discussion about whether it's going to replace fiat currencies. How is it going to, I guess, affect the world as we know it? I think if we just think about currencies, about money, right, as a medium of exchange in general, I think today, in today's world, obviously with Bitcoin, where it is today, there are funds involved. There, the major financial institutions of the world are involved. They're wanting to make Bitcoin accessible and other digital currencies accessible to the wider market. At the moment, it's only available, especially in the US, to institutional investors or accredited investors who have. So basically, it's not offered to retail customers, right? So the mums and dads, the retirees are not able to go out and purchase Bitcoin in a regulated financial institution. So it's not available, right, to the general public in that sense. Now if you decide to go out and purchase it yourself, it's not that you can't do that. You can do that, but you're not able to kind of market it to the general public in an unregulated environment, right? And so this is where institutions, financial institutions like like ICE, right? They're regulated. They have been allowed to create have a product that is related to Bitcoin, the Bitcoin futures, right? And make them available through a regulated platform, right? So in terms of trading and investing, it's being adopted, right? It's being adopted, that's for sure, and we can see that. And in terms of replacing fiat currency, well, it's started to be accepted, right, as payments. You can buy a car with it. You can use it through PayPal, at least in the US, and it's more focused on the US market in terms of using Bitcoin to purchase things with. But undoubtedly, there's going to have to be some conversion back to fiat. Right? So for the moment, Bitcoin is not going to, revolutionize the way that we we buy and sell things. Not at this point. But even if it does become a major way of paying for things, it's always going to have to be converted into some other fiat currency in order to be used anyway. Okay. And I think when it comes to replacing banking, I think we have to also understand that there are two different concepts here. Number one is cryptocurrency that we're talking about, and also the infrastructure, right, on which Bitcoin is based on, which is the blockchain. Okay, and so blockchain technologies, I think that is definitely something that is emerging for the future, but it is a technology that engenders trust, right, and also efficiency. And so the idea of smart contracts, all this sort of thing, interconnectivities between companies and ways of purchasing things on a big scale, that technology definitely, I think, will come into play, and undoubtedly the banking system will adopt those technologies. But that is a separate, activity versus what Bitcoin is about, okay, in of itself, as a storage of value, right? Okay, so let's move on, okay, to more about how do we analyze Bitcoin. So Bitcoin is a market. It's a market in of itself. As we can see, I mean, the price has just dramatically skyrocketed over the last couple of years, and so when we look at it, as a trader, right, or investor, whichever way you want to describe yourself, right, when it comes to Bitcoin, it's really no different to any other financial market, right, or currency. You've got to take into account the liquidity, the volume, the spreads on the platform that you're trading through, the venue, right, that you're trading through, the exchange, right. Then of course you've got the fundamental factors like the news and the news events that can impact the price. Then you've got your analytical factors, so the technical analytical side of things and related technologies associated with the analytics. So the quantitative angle of things also applies here. The quants, which is prevalent even in today's financial markets, right? A lot of funds are quant driven. They're taking information and running statistical models around it in order to come to a trading decision, right? And so all of these factors, market fundamental and analytical factors, all relate to Bitcoin as well. So one of the things that I write in the ICE Bitcoin market commentary is talking about a lot of these things. What are the who are the players kind of coming into the market here? And I think I may have skipped that slide. Let me just quickly jump back there. Just talking about the fundamental influences, right? On the supply side, you've got the miners, right? So these miners, they're out there because there's some sort of reward associated with it. So as long as there is a reward associated with mining, with validating these transactions, you will have people coming into the game. People who want to create these mining rigs, and in order to validate these transactions. So currently the reward is 6.25 Bitcoin per block that they validate. Okay. In terms of costs associated with doing that, there's going to be electricity costs, then there's basically the hardware costs and the maintenance of that, right? And if they have to pay rent, to whether it be renting of the buildings or the land, right, to set up these pools of miners, right, then that's going to also affect the number of miners who are going to be out there, right? In terms of the demand, as I was kind of mentioning before, look, the financial institutions are coming into the market. You've got family offices, accredited investors, and also retail investors who are allowed to purchase Bitcoin. They come into the market, and so what affects their decisions to participate is, on the one hand, fees and commissions, in order to trade, right, the cryptos, Bitcoin, and in terms of usage, as I kind of mentioned before, whether it's going to be an accepted form of payment, right? So currently, as I mentioned, Tesla, you can buy a car with it. PayPal, you're able to use it. Visa is also getting into the game by allowing companies who want to use Visa as a form of payment, MasterCard. This adds to the demand to transact in Bitcoin, right? And of course, investment vehicles, so ETFs, exchange traded funds, the futures, the options, the availability of investment vehicles, also adds to the demand to transact in Bitcoin, right? And then of course, you need the supporting services. So in the case of the payment side of things, you need the Visas and the MasterCards and the PayPals of the world to support the usage of or facilitate the payment of Bitcoin, right? And then you also, on the investment side, you need the fund administrators, the custodian companies to also be willing to support the use of Bitcoin in the financial services world. Okay, so that they're more the fundamentals, but when it comes to the technicals, right? This is kind of where Traddictiv kind of comes into play with our technology, right? And when it comes to the technology, right, or the analytics around Bitcoin, right, you're able to see Bitcoin, right? We use you can use TradingView, you can use I use ICE Connect for charts as well to get information on Bitcoin and the Bitcoin futures. And so what we have is the ability now to analyze the Bitcoin market just like any other market that we trade out there, whether they're equities or they're currencies, right? And so here is a chart. It's a daily chart. We have auto climate, so that's answering the question, right, of what is the market environment. So briefly, in terms of auto climate, if the climate is blue, it means that we want to have a bias to be buying, right? If we have a red dot, that means the bias of the climate of the market is that we want to look for opportunities to sell, right? Then we have what we call our order UFOs, that's looking for unfilled orders. And so what that is trying to identify and answer the question to is, okay, if the climate is for us to be buying, well, we want to look for these green areas, right, where the algorithm is identifying a price range at which buyers would be interested in buying it. And then these red UFOs, or unfilled orders, are going to be those areas where we'd be looking to sell it, right, those price ranges. So commonly we would go down to a lower time frame, in this case a 15-minute time frame, to identify those areas that we want to enter or exit the market. Okay, and so that's what UFO stands for, unfilled orders, and they could be red or green. Okay, and so let us go to the market itself. Okay, as it currently stands, and let's take a little bit of time. And I know that we have only 15 minutes left in our time, so I do want to make sure that we have time for Q&A. Right? So let's just take a look at the market as it currently stands. Here we are on a daily time frame, and so again, if we look at auto climate, it is telling us that we are in a buying climate. And so when I go to the lower time frames, I'm going to be looking for areas to buy at, right? I also have on here a exponential moving average, and I'm going to, and that is, change that to 10. It's going to be a 10-period moving average. And so what I'm looking for here using this technical indicator is I'm going to be looking for where order UFOs is at a lower time frame. I'm going to be looking at this area here for where potentially there is a buying opportunity. Okay, so when price comes down from this level of 62 down closer to this area here, I want to see if there are opportunities to buy there. Okay? And so going to a lower time frame, let's go down to say an hourly time frame. Okay, and that moving average is around 65.75. So I really would be interested in looking at buying opportunities only around this area here. Okay, so that's 65.75. So let me draw a line first. So somewhere around here is where I would want to be looking for buying opportunities. And so this is where the auto UFOs comes in handy. What it's trying to do here is identify areas for buying opportunities. Okay, so it's a lighter green shade. And the reason why it's a lighter green shade, so originally the auto UFOs identified this area here. I'm going to draw that a little thicker so you can see. And I'll do them in green, so it's consistent with colors that we want to see. So the reason why it's a lighter color green is because price had attempted to come down to this area before and had absorbed some of the orders, right? So somebody was able to purchase Bitcoin at that price, right? And at which point it subsequently moved away. So if price does try to come back down here again, right, this is where we would expect, right? Not guaranteed. I mean, not guaranteed. We would expect price when it comes back down here to move and rebound higher. Now, for those of you who are familiar with trading, you know that you would, employ, some sort of stop, right, to protect your position in the event that you're wrong. Okay, and of course you need to identify your risk and make sure that whatever you are risking out there is in alignment with your account size, so that you're not losing more than your account will allow. Okay, so traders, those of you who are experienced traders, I don't need to tell you that. If you're new to trading, just understand that there are risks involved. There is things that you need to do and plan for in the event that you're wrong, right? Because it's possible that price could go right through this whole area and maybe trade lower, right? We don't know. It's also possible that price could go up from here, right? That's also possible. So those of you who are new to trading, right? There's some education that you need to do in order to not only analyze and make a trading decision. In order to make a trading decision, but there's also risk management skills that you also need to learn about and before you actually enter any sort of market. Okay, especially the Bitcoin market, which, as you can see, it is you do have some strong moves, right? And so you need to make sure that as with any before any sort of trading or investment decision, you understand the market that you're trading, which is why you're here, right? To hear about Bitcoin, but also how to manage risk, okay, make a proper trading decision. So regardless of whether you are a trader that uses moving averages, or let's say that you are a Fibonacci, you like to use Fibonacci's, right? Right. So a common Fibonacci's are Okay, from pivot to pivot, so there's new highs. Okay, so you can see here, actually, let me make it a little darker. Let's see. Just some lines here. All right. So again, depending on how you use Fibonacci's, maybe you like shallow retracements, and so a 38.2% retracement, which actually aligns to this auto UFOs area, right? This buy UFOs area, could be an area that you also, based on the retracement of the Fibonacci's, can be interested in buying it, or maybe a deeper retracement down to the 61.8 could be another area. And so when you're applying different trading strategies, trading techniques, all of this can be used in conjunction with, say, auto UFOs, even to identify areas at which you want to that you would be interested in buying or selling at. So if we really look at the current state of affairs for Bitcoin, we are in an uptrend. Okay, we have retracement levels at which identifying a couple of levels at which you may be interested in buying Bitcoin at. Looking at the 10 period moving average on the daily time frame, it aligned closer to this this buying area opportunity, right? And so again, depending on your trading strategy, right, you may come to the same conclusion that that this potentially is a good area to purchase Bitcoin at this point in time. And again, that's assuming that we have a continuation of what essentially is this uptrend here. Okay. All right. So, okay. So we only have a few minutes left. So let me just get back to the slides here before we get into some Q&A. If you look at mediums of changes, there's really only two ways to look at things. Either use your money to buy things with, or you can use your money to invest or to trade. In the case of Bitcoin, right, people like to use Bitcoin futures because, let's say you already have an account with Phillip Futures, for example, and you're familiar with that trading platform. Maybe you're using CQG, maybe you're using TT, maybe you're using Nova, right? You're familiar with that platform, you know how it works, you know how to place your order, and so and you're familiar with futures exchanges like the ICE exchange, and maybe you're already trading the mini dollar index, right? And so because you know what commissions you're paying, the fees, the margin involved, then to be able to trade, in this case, the back Bitcoin monthly cash settled futures, right, is not a difficult thing for you to do, right? If you want to trade the physically delivered futures, I mean, you can also do that as well, right? So it's just a matter of understanding which symbol, right, to trade these products under, right? But it's all very familiar territory. Okay. I won't go through the benefits of the futures market here, except just to highlight the fact that, again, you're able to go long or short in this market, right? Whereas, in other, even for equities, right? Sometimes, unless you have a certain type of account, you're not able to go short in that market, right? But in the futures markets, you can. And so at the end of the day, when we're talking about trade execution, right, funding your account is through fiat bank, right? So there's funding it through US dollars or Singapore dollars. It's no different to what you already do or what you can do today. There's no restrictions. The only difference is really the symbol, the market made available through your broker, right? So this futures platform could be, as I mentioned before, Phillip's futures Nova platform, for example. You go through the ICE exchange, right, who have issued the contract, right, for Bitcoin, and that information, right, that ability to trade is really the same. When it comes to the Bitcoin market itself, well, that's where the exchange gets its reference rates from, right? And so you don't have to really worry about how do I get my money in and out of the spot market, right? You've already got that set up, right? And even today, if you're more on the retail trader end, right? You're able to open up a futures account, right? And you don't have to worry about the ins and outs of trying to access the spot market, right? Unless you're ready to do that, right? But again, the futures exchanges and the brokers are an established and well-known venue for trade execution. All right. So again, in terms of what futures are offered on the ICE exchange, as mentioned before, there's $1 million index and the BAT Bitcoin. Okay, they do have other products on the energy and the forex side. In particular, it's for the ICE Singapore exchange, there is no data fees from through trading through ICE Singapore. All the contracts are cash settled, so again, you don't have to worry about physical delivery. And then mini contracts are available for all of these underlying products, in particular on the currency side, okay, and the energy side. This is the future symbol for the back Bitcoin. The expirations are all months. The minimum fluctuation or the incremental move of this particular contract is $2.50, which is US. So Bitcoin is priced in US dollars, and the multiplier value, so the value of each of these moves is $2.50. Okay, it's only closed 2 hours a day, and it basically trades 22 hours in a day. Okay. So I think I'm kind of running out of time. Just quickly here, we do have the Bitcoin market commentary that you can check up on every week. You can subscribe to it on via Singapore. Just click on this link here. Okay. We do have a follow-up. I'll be able to spend more time next week on talking about Bitcoin but more in the context of using it to hedge. Okay. So that's next Monday. So if you're able to join that, there's the QRC code there. And we do have a, if you're new to futures and you want to understand how to navigate this particular market, ICE is sponsoring, okay, some training in this. You also get access to order UFOs for 3 months. And so $72 is all that you need to pay for that training. Okay, so do take advantage of that. And so Q&A, Ming-Hui, I'll pass it back to you for Q&A.
All right, thank you very much, Andrew. We do have a little bit of a time constraint, so we'll cherry pick a few questions for it. And our first question for the night is, how should one analyze cryptocurrency fundamentally and technically?
Yeah, I think, and that's a great question. I think fundamentally, as I kind of mentioned before, you really need to look at the drivers of Bitcoin. The big players are into it, and so that's definitely going to drive prices, right? Whether long or short. And in terms of it being a replacement to gold, for example, that's a question I also get asked at times. It's definitely becoming an alternative investment vehicle, right? And so I think understanding the environment that we're moving into is important before you venture into Bitcoin or any other financial market for that matter. And then technically, I think as I've demonstrated here very very briefly, you're able to have the market data out there, and therefore you are able to apply technical analysis to that market in the same way that you would apply it to any other market. Okay, next
All right,
question.
thank you. Yep. Okay, our next question is Bitcoin a currency or an asset?
That's a great question as well, and I think the accountants are struggling with it. As from an accounting background myself, I think one of the conclusions at this point is that it's an intangible asset. And so I'd be interested to see what Tesla does, and some of those other companies who have announced the purchase of Bitcoin, and see how they report it on their balance sheet. And so I would kind of defer to the accounting world to determine whether it's an asset or not. But definitely, in terms of currency, well, the fact that you're able to purchase things with it, kind of also meets the definition of a currency as well. So.
Okay, the next question is, can Bitcoin replace the Bretton Woods system or the gold-backed economy or the US dollar as a world currency?
Yeah, I think in this world it's all about diversification, whichever way you look at it. And so it's all about, I think, having a diversified portfolio for your wealth. Having property, having gold, having some exposure, I think, to digital assets is not a bad thing. But I think, like anything, you don't want to put everything in one basket. So is it going to replace the US dollar? I don't think anytime soon. But again, I think it just goes back to diversification.
Okay, for the next question, it says, is it normal that you cannot place an order with a price limit when you buy or sell Bitcoin, and why is that so?
Well, when you're dealing with the futures markets, that's not an issue. You can place your orders just as you place orders with for any other futures product that is out there.
Right, okay, the next question is whether Bitcoin can beat inflation.
Okay, so again, I guess the question there is around inflation. So I think the question is purchasing power at the end of the day, right? Again, I kind of defer back to asset allocation, diversification. We don't know what where the price of Bitcoin is going to go to. Some people project 400,000, 100,000. Well, it's already gotten to 63,000. So it's not too far off to 100,000. To get to 400,000, it could take, who knows how long, right? But at the same time, it's an emerging, I think, asset class, and so to protect against inflation, I think gaining some exposure in some way is not necessarily a bad thing. Okay? But to put all of your money into it, you wouldn't want to do that either. So.
Okay, I think we will pick our last question for the night, and it's what could be the reason for the hikes in Bitcoin? Is it a bubble?
Very good question. I think the attraction of Bitcoin, has come in. Well, if we go back to the history of Bitcoin, it came out of the financial crisis, right? I mean, it's 10 years old. Well, now 11, 12, turning 12, right? And so I think there's been a lot of printing of money, and so I think the earlier question about inflation, there's a lot of concern around the value, right, of money and this current system. So I think as we look at these emerging asset classes, digital assets, I think it's here to stay. The very fact that governments around the world are looking at this, I think it's something that is not a hype anymore. I think it's a reality, and people are embracing it this time and trying to work it out. So that's why it's getting a lot of attention, and it will continue to get a lot of attention. And I think that we want to make sure that at the very least we're educated about it, which is why I'm glad that you're here, learning about Bitcoin, the basis of it, and how to participate in this emerging market.
All right, thank you very much for the insights tonight, Andrew. And thank you very much, everybody, for your time tuning into this webinar tonight. We received an overwhelming number of questions, and for those we didn't manage to get to tonight, we'll contact you via email, and we will also be sending everyone a link to today's webinar so you can watch it again if you'd like to. So that's all for today. Thank you, everyone, and goodbye.
Okay, thanks, everybody.